Okay, so if you're a homeowner or you're even just thinking about it, you've definitely heard these two words thrown around, a lien and mortgage. They sound connected, and they are, but they're not the same thing at all. Today, we're going to break down that crucial difference.
So what is the actual difference? You hear these terms all the time, but they are not interchangeable. And getting this right is really the key to understanding who has a claim on your property and why.
All right, picture this for a second. You're about to sell your house, or maybe you're finally buying that dream home, and bam, out of nowhere, you find out there's some hidden legal claim on the property you knew nothing about. It could stop the entire deal dead in its tracks. That's the kind of stuff we're talking about today.
So let's pull back the curtain and demystify these legal claims. I promise, once you get the basic ideas down, it's not nearly as scary as it sounds. See, to really get what a mortgage is, we first have to understand the much bigger category it fits into, and that category is liens. Just think of lien as the parent for all of these kinds of claims.
So what is a lien exactly? Well, to put it simply, it's a legal claim that a creditor has on your property. It's basically their way of securing a debt, to make sure they have a way to get their money back if you don't pay up. Honestly, the easiest way to wrap your head around it is to think of a lien as a legal dibs. It's like a creditor slapped a very official, very powerful sticky note on your property's title that says, "Hey, I'm owed money from this place."
And don't let that sticky note idea fool you. This thing has some serious teeth. A lien gives a creditor the actual legal right to potentially take possession of your home if a debt isn't paid. And at the very least, it can bring any attempt to sell or refinance to a screeching halt until that debt is totally cleared.
Now, let's connect all this back to the lien that's probably the most familiar to every single one of us, the mortgage. That's right, your mortgage is, in fact, a type of lien.
A mortgage is a very specific kind of lien, and the magic word here is voluntary. It's a lien you willingly agree to when you get a loan to buy a house. You're basically telling the bank, "Yep, I agree you have a claim on this house until I pay you back every penny." The house itself is the collateral.
And this brings us to the two big families of liens. On one side, you've got your voluntary liens, like a mortgage that you choose to take on. But on the other side, you've got involuntary liens, which can be slapped on your property without your consent for things like, say, unpaid taxes.
Right, so let's talk a little more about those involuntary liens, because these are the ones you definitely don't choose and the ones that can cause some pretty nasty surprises for homeowners.
So where do these things pop up from? Well, a few common places. The government can put a tax lien on your home if you get behind on property taxes. A contractor who, say, renovated your kitchen but never got paid can place something called a mechanic's lien. And they can even come from court judgments if you lose a lawsuit and owe someone money. So here's something that's super important to understand. When you have multiple claims, multiple sticky notes on a single property, they're not all created equal. There's a pecking order for who gets paid first. And here's the hierarchy that might actually surprise you. In pretty much all cases, the government's tax liens get top billing. That means if a property gets sold to cover debts, the Department of Finance gets its money for unpaid property taxes before the bank that holds your mortgage sees a dime.
All right, let's tie all of this together. If there is one golden rule, one key takeaway you get from all this is it. So when all is said and done, what's the one thing you absolutely, positively have to walk away with?
Here it is. All mortgages are liens, but not all liens are mortgages. A mortgage is just one very specific, voluntary type of lien inside this much bigger universe of legal claims.
The easiest way to picture it is like this. Think of liens as this huge umbrella. Underneath that umbrella, you've got your mortgage, which you chose to have, sitting right alongside other types like tax liens or contractor liens, which, you probably didn't choose. Okay, so who cares? Why does any of this actually matter to you? Because when you buy or sell a home, you need what's called a clear title. And that just means making sure there are no unexpected liens, no hidden sticky notes stuck to the property that could blow up the sale or threaten your ownership. Understanding this difference is really your first line of defense. And that leaves us with one final thought. Whether you're already a homeowner or hoping to be one soon, it's always worth asking yourself, what kind of sticky notes might be hiding on your property's title? Knowing the answer to that is the real key to a smooth, stress-free deal. Thanks for tuning in.